I had this comment. I just wanted to get your take on this because you've talked a lot about like the timing of the cycle, and then maybe after this we can get into the pulse chain stuff. But Kay Hudson said, "What would you look for in the next 6 months to indicate a longer cycle or same cycle?" I know you've had lots of thoughts on this, but was interested in your perspective here.
Mm-hmm. It'll be much easier for me to tell you because I'm a kind of on the fly guy. Honestly, I get a read of the market as it's happening. But I mean, you could look into like you could take this 1,000 different ways and look into different indicators. And let's see, maybe we look at MACD. Maybe we look at, so you could look at, like, I'll be doing this on my own. I'll be looking at indicators, and pi cycle top is a good one. Like, so here's an example. By the way, I don't just use one tool. I'm going to use as many tools as I can because like I got the mind space for it. So they used to call it lookintobitcoin.com, but that got changed, I think, to Bitcoin Magazine. And I think you could still do the charts. Well, here's a good one. Puell Multiple. So if Bitcoin goes up at a sort of a slow and steady rate all through next year, and you don't just get a blow off, and that could imply that there's enough demand there to eat up the new dollar inflation. And that's what this chart does. This is called the Puell Multiple. The orange line is showing you the dollar amount of Bitcoin that's being mined every day. So right now, the Puell Multiple is sitting at a 0.74. And like you could see historically that what marked the top was touching this red box up here. So if the Puell Multiple doesn't get up into the red box or tap it, we could be looking at a longer cycle.
Wait, I have a question. Not to interrupt you, but you said this is how much Bitcoin is mined every day?
The dollar value of it. So that's why this dollar line goes up and down.
I gotcha. Okay. All right.
And that's what
they say. That should be pretty static, right? The number.
You see where the halving came in here.
Right. Okay.
So the halvings, they obviously, that's where they're the resets that occurs. So then obviously if you're making $1 million a minute in Bitcoin mining, and then the halving happens, it just went to $500,000 a minute.
Right. Okay.
So that was your reset. And so, yeah, so this, watch for this to grind up slower over time. Maybe that means that there's enough, fiat Ponzi dollars coming in to absorb all that fresh Bitcoin, for longer, instead of it just going straight up, and that's the cycle. So that's at least going to be able to measure the amount of externalities or external pressures that's coming in on the Bitcoin price, is this Puell Multiple. And it's been in this like long-term like decline. So these highs are getting lower, but you'd think that if any point in Bitcoin history the demand could beat this deathly line, it would be now, where you got where you got ETF money coming in, right? So keep an eye on that one. And then the other one was the pi cycle top, which is called the top every time. Like there has not been one instance where this chart did not call the top. And this is why I'm so bullish on this current cycle. So in the very first, in the very first cycle, they crossed here, and then there was a little bit of overperformance when Richard pushed this up here. Richard and Bros pushed the Bitcoin price up to $30, but this did mark the top here. So the very first cycle was a little bit of an anomaly, but after that, this marked a top. I got to be more specific. When the orange crosses the green, the orange is the slow line and green's the fast line. The orange line is the fast line, the 111 daily moving average, and the green line is the 350 DMA times 2. So when there's that cross that occurs where the fast line crosses the slow line to the downside, that marks a top. So it did it here, it did it here. So then within a few months, it was topped. Here, you had a second top here. In 2017, it called it to the freaking moment, right? He topped there and it was over. And then in the last cycle, it topped here, right where Richard called the break of the parabola, and the pi cycle top came in. Now you did get a double top there, but what's got me so bullish on this cycle is how we've had time for this to go sideways. So, up in this period here, this was on a pretty steady slope. That was probably going to cross by, I don't know, probably right about now would have crossed, and that would have been the end of the cycle, because Bitcoin price would have been up here maybe. And so then you would have got that cross. Well, you didn't get that yet. And instead you got lots of time to accumulate the range. And what it did is it tilted that fast line down, actually, away from the green line. And the green line is still on a positive slope. So all that does is that gives the airplane more runway. And the longer it goes like this, the better. If it goes straight up, that's bad. You want to see this just be painfully boring to the upside, to 120K, 140K, because that's going to really push out the cycle farther into 2026. So there's a couple of reasons.
And we talked about before, I mean, that would be really the most bullish scenario of all. I mean, the longer this thing goes, the longer we can squeeze out of this, right? I mean,
and then I can, we all like, pulse chain stuff and HEX. And so what would that look like for HEX potentially? Well, I went ahead and I put the Amazon price chart on HEX just for, for example. And it looks something like this, where we're coming out of this disastrous lows, triple bear market, right? And you got the top, and then you had the failure to launch pulse chain, and then you had the launch of pulse chain, and then you had the FUD tweet. Like, that's enough bad stuff in a row. Okay, guys, we don't have to have any more bad stuff happening for a while. But if I put this on like a weekly, this is what HEX looks like, right? It's where you don't get regular cycles anymore. It's just demand stays constant because the product is validated, right? Everyone agrees that it's a good product, and then you just get a constant demand. And maybe we top out on HEX here at 20 cents, but then maybe you break the cycle. I don't know. This is just putting Amazon's fractal on it and trying to put your own feelings on how or why this would play out in this way. Now, I not 100 on all that. I'm just speculating that if you really think about it, this could just do this type of thing where it just goes up and to the right for the next 10 years. And you get plenty of opportunities in here to buy big, deep discounts. Like I think this would be a 87% decline back down to 2 cents. So you could go from 20 to 2 on HEX. That seems like a logical top, right? 20 cents top on HEX comes back to 2.
That drop seems logical too for the next cycle. Yeah, from 99 down to 87. So yeah, a little less volatility.
And then say like, this is where BlackRock decides, oh, HEX is a good asset, we want it, and they start accumulating it, but you just find out here, and then there's a mad dash on them, and then it pushes it up to the 56, 59 cent area, and then there's just some consolidation. Really was all it looks like for a couple of years. I mean, look, this stuff can happen. Just there's the sky's the limit on what's possible after regulatory clarity is in, right? So I think about it for HEX this way, but I also think about it for the whole crypto space, is that we're going to move away from the 4-year cycle, because honestly, painfully slow grind up where Bitcoin just puts in 20% per year on average makes more sense to me than anything. It just makes sense to me because there's an forever buy and burn. If people can buy with their 401k, or the ETFs need to buy forever, like they can make a market at any price. Like this thing could just, that's why I have this chart here, which basically just, if you extrapolate this out, I mean, it's just where these bands are converging. This, this half-assed logarithmic curve I just drew on here, like this is just gonna, this is a huge range where Bitcoin can just play between 50,000 and 250,000, and it could go all the way out to 2030. And it's just a slow bleed or a slow grind. And so I think the market dynamics are changing, guys. This was the beginning of that, was this crazy. This is where Bitcoin 1 was in 2017. And this was where, users could not get enough money into this space because the exchanges were literally halting signups to their exchanges. And so there was so much backlogged money at this time that as soon as they got the accounts, that money was getting pushed through. We never saw that quite again because the infrastructure is now there to be able to onboard billions. And so it doesn't make sense to get those kinds of cycles so much anymore, but the gains will still be there, but they'll just look flatter but they'll take longer, but they'll still be really good though, especially in altcoins. And you might, if you want these kind of hyperbolic moves, that's where you'd look to Pulse Chain or HEX or some of these other illiquid DeFi type coins.
What you're saying makes so much sense, and I've been thinking about it for a while too, is like we're just going to see less and less volatility over time because just the maturity of the asset, like as you said, the infrastructure is there now. We're now getting like big players in here and stuff like that. So the gains could still be there for BTC, obviously, we're more interested in altcoins, but just seeing, maybe you could if you wanted to paint a 4-year cycle out of it because you wanted to see that in the charts so badly, I guess you could, but that it would be much harder to see, as time goes on.
Well, each year incrementally, or each cycle, I should say, you're always seeing less of a dip. First year, Bitcoin dropped,
That's
what,
right.
90, 95% the first year.
Yep. Here.
What was it there?
Yeah, it was 95. I'm pretty sure.
Yeah. And then the next cycle, it was 90%, and then 85%. So, you're dropping by about 5% better each cycle. So
Yep.
I'm sure that plays out in the rest of the altcoins. Wasn't it historically when Bitcoin topped, it was 28 days that Ethereum topped after
Yep.
that previously?
That's right.
Yeah.
Yep. So yes. And so also I think that, there's going to be there's going to be a switch that's flipped at some point that like mimetics is going to evolve into utility because because the lines are going to blur. So meme coins, right? Like there's eventually meme coins are going to get utility or they're going to fizzle out.
Yeah.
And the utility is going to become like really important. And like the line between them is going to blur. And, look, I'm a guy that made a coin that did really well. And now it's getting utility built on top of it. People used to call it a meme coin. I would disagree, but like I just think, boilerplate ERC20 token is, that doesn't necessarily define it as a meme coin per se, but boilerplate ERC20s can get utility as well. And we're going to prove it. So yeah, I think there's going to be a shift here. I don't know if it takes 3, 5, 10 years that everything's going to need more of a reason to exist, right, on the blockchain. Otherwise, it just gets diluted.
Yeah.
That's an opinion, by the way. That's not fact.